So you have questions about health savings accounts or HSAs. Hi, Bob Jennings here, trying to answer those questions for you. You know, there are 4 key points to recognize when we're talking about an HSA or health savings account. Number 1, an HSA is a 2-part plan that combines high deductible health insurance with a special savings account. And the first point is that you remove or replace your old low deductible traditional medical insurance with a high deductible insurance plan. Right, now let's say that again. You still have to prove insurability. But what we're doing is replacing a very low deductible insurance policy with a very high deductible insurance policy. If you're ahead of me, you're already thinking, well, hey, isn't that going to lower my premium a lot? Yes, it will. You're also thinking, doesn't that mean I'm going to have to pay a lot more expenses out of pocket? Not necessarily. So our first point is we replace traditional low deductible insurance with a high deductible insurance, saving a tremendous amount of money on the monthly premium. Okay, that's point 1. Point 2, then you may deposit as much of that savings as you wish in a special tax-deductible savings account called a health savings account. How much can you deposit in there? Well, the only limit is the IRS imposed limit. For a family coverage, it's around $6,000 a year. For single coverage, it's around $3,000 a year. Of course, those numbers change every year. You need to contact us for further information. You don't have to put a dime in that savings account. You can put in a piece, you can put in all, and you can flip-flop from one year to the next. There's total flexibility on an HSA account. The only thing is, whatever you put in, you get to deduct on your tax return. And you don't have to itemize deductions to do it. Everybody gets this deduction on the front of the return. So how much you put in is limited only to the IRS requirements. What if your employer puts some money into an HSA for you? That's fine. Any money your employer contributes for you is a tax-free benefit for you. You may contribute money in addition to that, again, as long as the total from both you and the employer is still underneath that IRS limit. So point 2, you have a special tax-deductible savings account that you can put a portion of those premium savings in within the IRS limits of $6,000 per year max for family coverage and roughly $3,000 per year max for individual single coverage. Our third point revolves around that savings account. Now, you can invest the savings account anywhere you wish, meaning anywhere that qualifies as an IRA trustee may invest that money for you. Stocks, bonds, mutual funds, banks, insurance company, brokers, whatever. We suggest that you deal with the people who are most knowledgeable with your account. That's not really my third point. My third point is this. Wherever you invest that money, whatever it earns, whether it's interest or dividends or capital gains or a combination of all 3, it is totally free of tax as long as you leave it into that special health savings account. So our third point is the savings account itself, not only did you deduct the money when you put it in, you don't have to pay tax on it while you leave it in the account. Our fourth and final point is what makes the HSA such a valuable tool. Remember, you deducted the money you put in the account. You did not pay tax on it while it's in here. Here's our fourth point. The money that you withdraw from an HSA savings account to pay for your qualified medical costs, this would be you, your spouse, your dependents, is free of tax. Wait a minute. This sounds too good to be true. I deducted what I put in. I didn't pay tax on it while I was in there, and I don't have to pay tax on it when I get it out. One of the single best fringe benefit plans in America is the HSA. For further information, please feel free to contact us at our website at the bottom of the screen or by calling our number that you see on the screen. Bob Jennings, thanking you again for listening.